Stock market crash 2022. Is dollar gonna crash due to overprinting process? Inflation, is it gonna rise? What's going on? We need to talk, guys. So let's get started. Hey everyone, welcome and welcome back to my channel once again. This is your friend Abhishek, but not a financial advisor. That's really important. Yeah. So why the hell I'm making this video now? Stock market crash 2022 once again. Because guys, our dear Jerome Powell recently did something. So let's check that out. So guys, before we start with today's video, I just realized when I finish this video is gonna be more than 30 minutes long. So just not to make it so boring, I'm dividing this video into two parts. So in this video, we will be discussing what is the general situation with the stock market and what is my personal opinion. And then in the second part of the video, which will be the next video, in that I will share with you guys my strategy and some examples of the stocks which I'm investing in. So now let's get started with the part one of this video.
Okay guys, so here we are, and this is what happened on January 6th, the first quarterly meeting of 2022 from the Fed. So the headline says Fed minutes paint a picture of a central bank ready to swiftly abandon easy policy stance. So the headline speaks for itself, but anyways, let me give you guys a summary of those meeting minutes from the first quarter Fed 2022 meeting. So as you can see here, participants generally noted that given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the federal funds rates sooner or at a faster pace than the participants had earlier anticipated, according to the summary. Earlier anticipated last year in December 2021. At the meeting, Fed officials had a wide-ranging discussion of how to move policy away from its current easy stance, which we all knew that it is really an easy stance, by hiking the interest rates and also shrinking its 8.67 trillion balance sheet. So guys, this is what I already mentioned in my last video last year, and I did say that this is a really easy stance from the Fed. This is not strict at all. This is not gonna help to fight inflation at all. I mean, look at the 10-year treasury yield rate and look at the inflation rate. There is no match. 5.6% of difference. It's huge, guys. It's huge. So finally, they will be reducing their balance sheet, this asset acquiring plan, which they have been doing since 2 years now. And this has to come to a stop to fight inflation. Again, guys, the market can crash if the interest rates rises at a faster pace. But trust me on this, this is really good for the economy. This is really good for long term. So if you guys are looking to cash out in short term, then by all means you should definitely, if I would be looking in for short term, I would definitely take all my money out before the crash happens, because nobody can tell you when the crash will happen. But if the interest rates rise at a faster pace and the 10-year treasury yield, which is bound to increase, because this, guys, is an artificial market which we are in. This is totally artificial. The Fed has been stimulating, the Fed has been pumping up the economy with overprinting. This is artificial economy. The stimulus checks, with all the stimulus checks which has been going on, this has created an economy which is far away from reality. And this is what is really worrying me out, because we are at peak. The market is in full bull mode, which is far away from all the highest peaks from the past, which is okay. The market eventually should rise in the coming years, and it is bound to rise over the years, but this is abnormal. This is not normal and real, in my opinion. And this is why we have to take it with a pinch of salt, that if the market crashes, it will be for good. For long-term investors, it will definitely be for good, because then you can find businesses who are fundamentally strong, who are staying there. And even for the growth companies, trust me, even for the growth companies, when the market will crash, those companies will eventually have to grow organically, which is what you want in the long term. You don't want company to acquire huge amount of debts with low interest rates and keep on piling debt. Yes, at some point, every business, even me, I'm taking advantage of low interest rates. But it's not that I am just keeping up on piling up my debts, because at some point you have to pay those debt. Doesn't matter if it's on low interest rates or not. Yeah. So you want businesses who are sound and who are growing organically. This is what you want. And if the market crashes, then only those businesses will survive who have been growing organically. And yes, I do understand that the growth companies will suffer, but eventually they will also be okay in long term. And that's why for now, to save myself from this crash, or let's say not save myself, okay, I will say not save myself, but to prevent from getting my portfolio getting hit with a huge damage, I am diversifying in a different strategy, with a different strategy, in a different type of business. Yeah. For example, first of all, I'm a really huge fan of real estate. So I have been buying real estate a lot. And this doesn't matter if it's a slow economy or if it's a fast growing economy. Real estate is a business type of business where I will be benefiting in any kind of economy. If it's inflationary or if it's not, doesn't matter, because I'm getting a rent. If my real estate price value is not increasing, then doesn't matter, because I am getting a rental income. Yeah. So in either way, I am benefiting from real estate investment. So other than that, I am putting my money into those businesses which have those type of business contracts in which they can pass on the rising cost to their customers. Like I have explained in one of my videos, you can have a look at the icon above. I will share my strategy and a few examples in the next video. So this was just to give you guys an update what is happening currently and how it might affect the stock market in this year.
So, like you saw, guys, and I mentioned this already last year in one of my videos, which you can find in the icon above, that this might happen, guys. This was bound to happen, because that is really not the way to fight an inflation of 6.5 to 7% and which can keep on increasing. Yeah. So, again, what is this video about? First of all, remember this: nobody can tell you that what's gonna happen next. And especially me, I'm just some random dude on YouTube, guys. So is stock market gonna crash in 2022? Is dollar gonna crash because of overprinting? Is inflation gonna stay? How the hell I can tell you that? Nobody can tell you that. And if somebody is telling you that stock market is gonna crash in 2022 in this particular day on this particular time, guys, then he's God. And you should definitely trust him. Okay. So, first of all, what is going to happen? Yeah, everything is based on assumptions. So, like I said, I mentioned this last year already, that this was supposed to happen, this might have happened, and it happened. And we still are not sure what will be the decision in March. And this was just a signal by the Fed that they might increase the interest rates. And we still don't know what will happen at March end, when it is going to start. And guys, of course, Fed will never take such a drastic step in just one go. What I mean by that is that they will never stop this buying back process in one go and increase the interest rates, because that would be a big disaster for them. Yeah. So they are doing it by step. And this is what I mentioned in my last video, that they might change their plans, because they have to slowly get into this step of increasing the interest rates much higher than what they anticipated or made as in a statement. So anyways, so what am I doing? I will discuss in this video. Yeah, I will show you some examples what I'm actually doing. Now, just to summarize that, guys, I am not I have not stopped pouring money into the stock market. I have just changed my strategy, because looking into the history, 2008 bubble, first of all, guys, understand this, yeah, that it's not, history repeats itself, but it is not always the same, because we are in a different economy. We are in an economy with different mindset. So it's not always good to look into the history and getting too much panic. But yes, we can look into the history to strategize and to make a new plan and to make a new strategy of our investment. So in 2008, what happened? So in 2008, S&P 500 dropped by 40 to 50%. People were investing in gold? No. Gold was not the investment asset which saved people's lives. Gold fell by 40 to 50% as well. Then what was the asset? Well, 10-year and 30-year treasury yields. Yes, guys. And look at the treasury yields now. 10-year treasury yield is sitting as at 1.7%. And last year when I made this video, the bond 10-year treasury yield was sitting at 1.47%, and now it's at 1.77%. But guys, still it's not high, to be honest, trust me. Just imagine inflation at 6% and 10-year treasury yield is sitting at 1.5, 1.7%. Doesn't make sense at all. Interest rates have to rise and people will start putting their money into safe investment, super safe, non-risk treasury yields, 10-year treasury yields. So what am I doing? I have started putting a small amount of money into 10-year treasury yield, 30-year treasury yields as well. Because if the market crashes, which again, nobody can tell you when, yeah, but if it crashes, you have to be prepared, guys. And that's what I mean by changing my strategy of investment, not stopping, changing. And one more important thing, guys, if you're a beginner, yeah, then I assume that you guys are putting some money into ETFs, pouring some money into ETFs. By all means, don't stop that. For example, what I'm doing, I have not stopped putting money or pouring money into S&P 500. I'm not timing the market. I've just reduced my amount of the money which I'm putting into S&P 500 ETF because it's at all-time highs, guys. It's at all-time highs. So what I'm doing, for example, I was putting 100 euros in S&P 500 ETF. I reduced it to 50 euros, and that 50 euros which I save from not putting into S&P 500, I am putting that into some value stock. Yeah, individual stock. Again, if you guys are beginners, you don't have time to research your stocks, by all means, don't stop. I'm nobody to tell you, but anyways, that would be my opinion. I wouldn't stop. What I would do, I would not stop if I was a beginner. I would still be putting money into S&P 500 if that was one of my ETFs. And then I would make a mindset that, okay, this investment for me is 10 to 15 years horizon. Keep that in mind. If you guys are putting money just into such ETFs for 2 to 3 years of horizon, you might be a big problem because again, it might happen. Don't take these words literally. This is just my opinion. These are just assumptions. Considering the current inflation rate, if the interest rates rise at a drastic rate, yeah, by the year end 2022, then S&P 500 could crash by 40 to 50%, and I wouldn't be surprised. I wouldn't be surprised. And then to recover, it might take 2 to 3 years, and you would be, yeah, in a big S. So that's why if you are considering a horizon of 2 to 3 years, guys, you might be in a big problem. So what I would do instead, I would keep putting money into such ETFs, but increase my horizon from 10 to 15 years at least. Yeah. Anyways, if you are putting money into ETFs, your time span of investment should be really long. So guys, that's all. That was the first part of the video. I just wanted to inform you guys what recently happened, what was Fed's signal, which might happen in March, and what could happen to the stock market in general. But let's wait for my next video in which I will share with you guys my strategy. So that's all for today. And I wish you a nice weekend because today is Saturday when I'm recording this video. I don't think I will be posting it today. So anyways, I will be posting it on Sunday, I guess. But anyways, so enjoy your weekend, guys, and have a good time. Still New Year. And I hope you guys will achieve your aims in this year, whatever aims were for this year. Yeah, slow and steady wins the race. So that's it. That's all. Stay healthy, stay safe. I'll see you in the next one. Until then, ciao.